Hello traders, this is the CPI preparation video part 2. In part 1 I went over all the lessons learned that are common to every CPI announcement, and I gave you my trading plan for tomorrow, June 12, 2023, how I am going to trade the CPI announcement. In this video I will go over the price action of each CPI announcement. CPI announcements usually are at the beginning of the New York session or 30 minutes before the opening of the New York session. The New York session opens at 1 p.m. UTC until 10 p.m. UTC. So this is the price action. Also, I forgot, this is the 30-minute chart, okay? So, and this is the price action of the New York session following the CPI announcement. Okay, now inflation numbers were slightly better than expected. The inflation rate year over year was forecast to be 6.7, and in actuality it was 6.5. Core CPI rate was expected at 5.8 and it was 5.7. So it was better than expected. And what did we get? This was the announcement. First we got a move down. Why? Because many traders took long positions because they heard that the CPI numbers are good. So the logic dictates that if CPI numbers are favorable, that price is going to go up. But the market maker also wants to make money off the CPI announcement. So what does he do? First he pulls the price down. First he dumps price to shake out all the traders that went long, and then price started pumping. You see low, high, low, higher, low, higher high, higher low. And after such a session, by the way, you can look at the Asian session. The Asian session, excuse me, was pretty flat. So what are the conclusions? The conclusions are that if the results are better than expected, we can expect price to increase. However, you should be careful of stop hunts. Okay, so first, maybe wait for the stop hunt, or if you are impatient to take a position, which I do not recommend, by the way, then your stop loss needs to be wide. Maybe your position size needs to be a bit smaller. Maybe your stop loss needs to be wider. Maybe you should go with low leverage or no leverage at all. Okay? But wait for the stop hunt, wait for the push down. This is where you can enter and expect a pump. Okay, this is January. Now, February. In February, the inflation now, this is very interesting. Listen very carefully now, okay? The numbers were slightly worse than expectations, meaning that the inflation rate year over year was forecasted to be 6.3, but in actual numbers it was 6.4, and core CPI was expected to be 5.4, but it was 5.6. So what did we get? Wonder of wonders. First we got a move down. Why? Because traders heard that the inflation numbers were not according to expectations, slightly worse than expectations. So everybody went short and the market maker obliged. He let everyone go short, and afterwards a violent move up, high, higher low, higher high. Why? Because it is true that the inflation numbers were not according to expectations, but however, inflation did go down. Okay? So be very careful. It is possible that inflation will not be as expected, but as long as inflation goes down, we can expect in the long term a positive reaction. But again, the impatient traders lost money. Why? Because they were quick to short this market. And I wouldn't want to be the trader that went short here in this week and to see what they got. So patience, okay? Let's go over to March. In March, inflation was slightly better than expectations, meaning that the forecast was for the inflation rate year over year to be 6.1%, and the actual numbers was 6%. Core CPI was expected to be at 5.6, and it was in 5.5. So overall, good numbers, and the reaction was accordingly. You can see that it is a 7.6% price rise immediately. This is a 30-minute candle, okay? So this is 12:30, a little bit of indecision, half an hour of the indecision, and immediately price shooting up. And this is why I told you to take profit. Why? Because after such a violent move up, we get an immediate dump. So what was it? It was a pump and a dump. And this is the close to the range low. Immediately price took off again to the 25.2, which was resistance at the time, and it dumped again. So if you see price getting above resistance in one candle or two candles, in very wide candles, very quickly, usually the quick move is the false move. And again, take profit. If someone longed this and didn't take profit at the range high, above the range high, above resistance, he lost all his position in a very short period of time. By the end of the session, the session was already in the red. Okay? Now this is April. On April, inflation numbers were better than expected. And see what happened. Wonder of wonders. Okay, in April, the forecast was for the inflation rate year over year to be 5.3, it was 5. And the core inflation expectations or forecast was 5.5, and it was 5.6. So first we learned that core inflation is more important, core CPI numbers is more important, it moves the market more than regular inflation does. So what we saw was a quick pump. Why? Probably to get rid of all the shorts, followed immediately by a dump to the range low. But I told you, sell the range high, buy the range low. This was below the range. And if you bought below the range low, you got a pump, and again a less violent, a less volatile dump and pump. Because this is why I told you that CPI is time to take profit. It's not time to hold your positions. You immediately take profit because price changes extremely quickly, and you don't always know which way it's going to go. So take profit. And this is a pump and dump. Okay? Now, this was May. May results were in line with expectations, meaning that the inflation rate year over year was forecasted to be 4.9, which was the actual number, and core CPI was expected at 5.6, and it was actually 5.5. So slightly better than expectations. And we got a dump. This was less violent, and it took a bit more time. It took, 1, 2, 3, 4 hours until the middle of the New York session, and I told you, sell the range high, buy the range low. If you didn't sell at the range high because you were waiting for more, if someone was greedy up here, he lost it all and price went to the range low. And again, in these sessions, buy the range low. Don't be afraid. Buy the range low, of course, with the stop loss, with risk management and everything, but buy the range low, because if you would have sold the range high and bought the range low, you would have made a hefty profit again with another pump and another dump, less volatile. And you can look at the Asian session. If the New York session was volatile with lots of moves up and down, the Asian session is flat. And this is the June CPI announcement here. Because I wanted to show you what happened, I had to go down to the 10-minute intervals, because otherwise it would have been very difficult to see, to visually represent the price action. On June, the forecast, inflation was better than expected. The forecast was for inflation rate year over year to be 5.3, and in actual it was 4, and core inflation was expected to be at 5.4, and the actual numbers were 5.3. So if it's logical that price will go up, right? Well, no. There was a short and quick pump to the range high, immediately followed with a dump to the range low, and another less volatile lower high and higher low. Largely, it's very similar to May's price action. So again, take profit, sell the range high, don't hold your positions on this session, and buy the range low. Don't be afraid to buy the range low, okay? Because usually it holds, okay? So this is a representation of all the price action from each CPI announcement this year. I already gave you the lessons at video number 1 and the trading plan, and we went over the price action. So now we are prepared, we know what to do. I wish you all tomorrow. We are going to battle at the July 12th CPI announcement, and I wish you all success. And one more thing, if you are not 100% sure, if you are afraid, maybe you are trading with a larger position than you should, maybe decrease your position size, maybe lower your leverage, maybe even sit this one out and wait. And just wait. The market will give you a lot of times to trade and make money. You don't have to trade every session. You don't have to trade every day. Be careful tomorrow, but if you feel prepared and you know what to do, then go for it. And I wish you all the best. I wish you success in trading and in life, and I hope to see you in the next video.